Actually, what we will do, we will start, we have a couple of non-controversial bills. Let me first call this markup of the Committee on Financial Services to order. Assuming nothing cataclysmic happens in the next couple hours, maybe we get some business done. I will now call up on the listed agenda H.R. 6642, the National Consumer Cooperative Bank Amendments Act. The clerk will designate the bill.
H.R. 6642 to amend the National Consumer Cooperative Bank Act to allow for the treatment of the nonprofit corporation affiliate of the bank as a community development.
I ask unanimous consent that further reading be dispensed with. Without objection, so ordered. And the gentlewoman from New York, Chairman of the Financial Institutions Subcommittee and author of the bill, is now recognized for 5 minutes.
I thank the chairman for bringing this bill up and recognizing me. This bill has bipartisan support and is supported by Treasury, and it basically makes a technical correction to the National Consumer Cooperative Bank Act to allow its not-for-profit subsidiary to be eligible for CDFI funds. The National Consumer Cooperative Bank was created by Congress in 1978 and is dedicated to strengthening communities nationwide through the delivery of banking and financial services, complemented by a special focus on cooperative expansion and economic development. The act that created the NCB also established a not-for-profit subsidiary, NCB Capital Impact, to reach further into low-income communities and to serve disadvantaged populations. It works to provide housing, education, healthcare, cultural centers, small businesses, and social services in economically distressed communities. In the last 10 years alone, NCB Capital Impact has invested more than $600 million in assistance to low and moderate income communities. These funds helped finance over 32,000 affordable housing units. And it's been very successful in many districts across our country. Despite their good work in serving low-income communities, NCB Capital Impact is not eligible for assistance authorized under the Community Development Banking and Financial Institutions Act of 1994, which is administered by the CDFI Fund. The fund has ruled it cannot certify NCB Capital as a CDFI because of the corporate structure of its parent, NCB. In short, NCB Capital is shut off from capital sources of financial awards that are needed to maintain their housing and community development efforts. This bill would allow them to access the CDFI monies. The CDFI monies are also very important. They serve as sort of a good housekeeping seal of approval in working with federal agencies and other public and private institutions. I urge my colleagues to join me. This is a technical amendment to the NCB statute so that the nonprofit, mission-driven NCB Capital Impact may continue to provide services to distressed and underserved communities. I urge support of my colleagues.
The gentleman from Alabama is recognized for 5 minutes.
Thank you. Move to strike the last word
Gentleman's
in support of this legislation. I do believe that this will expand financial services options for low-income communities, and commend the lady from New York for bringing the legislation. I'd like to introduce my full statement in the record.
Without objection, the full statement of the gentleman from Alabama and any others will be entered into the record. Is there further discussion on the bill?
Yes, Mr. Chairman, I have an amendment at the desk labeled Technical 001.
The clerk will designate the amendment.
Amendment to H.R. 6642.
I ask unanimous consent the amendment be considered as read. Without objection, the gentleman from New York is recognized for 5 minutes.
Mr. Chairman, my amendment is technical.
Let me rephrase that. The gentlewoman is recognized for a maximum of 5 minutes.
And I certainly will not use it. My amendment is technical in nature and is being offered to add a definition to the word affiliate on page 2, line 18. The definition that this amendment seeks to add is the same definition that has been used for the term affiliate since the Bank Holding Company Act of 1956. The term affiliate means any company that is controlled by, or is under common control with another company. This is being offered to ensure that there will never be any question as to exactly what this committee meant when we passed this bill. Again, it's non-controversial, supported by Treasury.
Is there further discussion? If not, the question now is on the amendment. All those in favor will say aye. The aye. Those opposed, no. The ayes have it. The amendment is adopted. The question is now on the bill as amended. Those in favor will say aye.
Aye.
Opposed? The ayes have it. The gentleman from New York, and the bill is passed. Members will have the appropriate number of days to file any additional views. I will now call up 6871, and the clerk will designate 6871.
H.R. 6871.
I ask unanimous consent that further reading be dispensed with without objection. So ordered. The gentleman from New York is recognized for 5 minutes.
I thank the chairman, and I also want to thank you for your co-sponsorship of this bill, the Expedited Funds Availability Dollar Limits Adjustment Act of 2008, H.R. 6871. Again, this has bipartisan support, is supported by Treasury and the Federal Reserve. This is a small but important step on an issue I've been working on for some time, which is the transition of our banking system to new technology that allows banks and consumers to access their money faster. I fully supported the Check 21 legislation that enabled banks to use new technology and get their funds faster, but consumers deserve to get the same benefits. Since the passage of Check 21, I have introduced legislation to reduce deposit holes and increase expedited funds availability so that consumers also get the benefit of the new law and new technologies. This is a bill that adjusts the statutory amounts banks have to make available promptly from deposits to take inflation into account and index them for inflation going forward. The Board of Governors of the Federal Reserve has approved these increases, and the ABA and the ICBA have signed off on these increases. The Expedited Funds Availability Act, enacted in 1987, establishes the maximum time periods that banks can hold funds deposited by checks before making them available for withdrawal. Section 603 of the EFFA requires that banks give next-day availability for the first $100 deposited on any one business day. The bill would increase that amount for adjusted inflation to $175. Section 603 also allows a bank to extend by one business day the hold period for most types of deposits. However, a bank that uses this extension must make $400 of those funds available on the day they would normally be available. The bill increases that amount to $700. Only Congress and not the Federal Reserve can change the dollar thresholds. H.R. 6871 also directs the Federal Reserve to issue regulations within a year to make the one-time adjustment to these two amounts and to index them for inflation at least every 5 years. This modest measure will help those at the lower end of the economic ladder who need prompt access to their funds and tend to use paper checks. We should get this done now. It is supported by everyone involved in this process. I had a stronger bill. I have adjusted it to earn the support of Treasury and the support of the Federal Reserve and some of my colleagues on the other side of the aisle. I urge you.
Is there further discussion? Gentleman from Alabama.
Thank you, Mr. Chairman. Mr. Chairman, this will make funds available to depositors sooner, and we support the legislation, and also to commend the lady for including a inflationary ratio, so it'll go up from now. Thank you.
I recognize myself just to say for 5 minutes that this is really a companion legislation that we adopted at the urging and with the cooperation of the banks, namely to, it was part of the Check 21, which is to let them be able to move funds more quickly, and we deemed it appropriate to see that the consumer got that benefit. Is there further discussion? If not, the question is on the bill. Those in favor will say aye. Aye. Opposed, no. The ayes have it. The bill is adopted. I now call up. What's the number on the? H.R. 6694, and the clerk will designate the bill.
H.R. 6694, to revise the requirements for seller-financed down payments for
I ask that further reading be dispensed with. Without objection, so ordered, and the gentleman from Texas is recognized on the bill.
Thank you, Mr. Chairman. I am honored to present this amendment. Mr. Chairman, the bill will deal with two classes of borrowers, those who will have seller-assisted down payment and those without seller-assisted down payment. Those with seller-assisted down payment will fall into several categories. If you have a credit score of 680 and above, there will be no risk-based pricing for you. If you have a credit score of 620 to 679, you will pay a premium of 1.25% annually and a 3% initial premium at closing. And if your credit score is below 620, then HUD will be permitted to establish a program, optional for HUD, to establish a program for borrowers who have credit scores below 620. The second class of persons that this bill addresses will be those who are without seller-assisted down payment. If they have a credit score above 600, there will be no risk-based pricing for them. Below 600, risk-based pricing exists, and it is based upon lowering the upfront fee and having a higher annual fee. The bill is a good one, Mr. Chairman. 1 million persons or more have already benefited from the seller-assisted down payment program. It has had a 94% success ratio compared to, say, 97% where persons have received no assistance with down payment, 95% for those who've received some assistance, be that government or family members. I ask that the bill be supported.
Is there further debate? Gentleman from Alabama.
Thank you. I move to strike the last words.
Gentleman's recognized.
Mr. Chairman, the major housing legislation that the President signed into law in July, which a lot of people refer to as the Fannie-Freddie legislation, included a ban on seller-funded down payment assistance programs and imposed a one-year moratorium on FHA's use of risk-based pricing. One of the few things that I was able to successfully include in the legislation was the ban on seller-funded down payment assistance. H.R. 6694 would reinstate the seller-funded down payment program on a limited basis and as well as suspend the one-year moratorium on risk-based pricing, which I actually support risk-based pricing, so my focus is on the down payment program. I appreciate Chairman Frank's good faith effort to address concerns that I and others have raised about the original legislation, but I do believe that reviving the seller-funded down payment program is unwise, and so I reluctantly oppose the legislation. Here are my reasons. The use of seller-funded down payment assistance on FHA-insured loans has come under increased scrutiny in recent years. HUD, the Internal Revenue Service, and the GAO have all expressed concerns about the providers of this assistance and its effect on the future solvency of the FHA program. In 2005, GAO issued a report finding that FHA-insured loans with down payment assistance have significantly higher delinquency and claims rates than do similar loans without such assistance. According to HUD, seller-funded down payment loans are 3 times more likely to end up in foreclosure as loans without such assistance. And that basically is the essence of why I oppose this, and I'm going to say it again. According to HUD, these seller-funded down payment loans are 3 times more likely to end up in foreclosure than loans without such assistance. So now, to me, seems like the wrong time to reinstate such a program.
Mr. Chair,
in 2006,
would the
the
gentleman yield
IRS...
for just a moment? I'd like to address it, if I may. Would you yield?
Oh, without me, actually, I don't know how much time I've got, but
I would give extra time if the gentleman want to have a colloquy.
All right,
I don't
go
think there'll
ahead,
be any
Mr. Green.
objection.
I recognize Mr. Green.
Thank you. I want to address the notion that there is a 3 times default ratio. What actually is the case is that those loans wherein the seller receives no assistance, there's a 97% success. Those wherein the seller receives some assistance, be that from the federal government or a relative, there is a 95% success, and it's 94 with seller assisted. So when the HUD says 3 times, they're talking about the difference between 94% success and 97% success. They don't give you the rest of the empirical data to let you see that the difference in percentages is marginal. And I thank you for yielding.
Okay. In 2006, the IRS issued a revenue ruling that stripped the organizations which use these down payments assistance of their tax-exempt status, ruling that the sellers often raise the property price to cover the cost of the down payment, resulting in no net benefit to the buyer. And nothing in this legislation addresses either of those concerns. In testimony earlier this year, FHA Commissioner Brian Montgomery warned this committee that his agency could lose $4.6 billion in 2008, largely due to unexpected losses from mortgages issued with seller-funded down payment assistance. That was part of my motivation for the amendment which was accepted as part of the legislation passed in July, which included a seller-funded down payment assistance. Now,
Gentlemen, yield on that point?
I would.
Okay, thank you. And I assure you I'll extend similar courtesies in the future.
Sure, and you always have.
Thank you. With reference to this aspect of the risk, this is why the new program is structured such that there is a risk-based pricing program. Those who have scores at 680 and above don't have the same risk as those with scores of 620 up to 680, 679 inclusive. So in these cases, we've increased the premium so as to cover the additional risk. The premium has been increased up to 3% at the closing and 1.25% annually.
Well, that is true only on people above a certain income. There's not at lower income levels. And I don't think that really gets at this problem. I know it's an attempt to do that, and I commend the chairman for offering that component, but in my review of it, I didn't find that it really gets at the problem. But I understand there's 2 points of view on this. I also understand this. I understand there are many members of the Republican minority that support a down payment assistance program, and that there are strong feelings. And I also realize that the votes are here to pass this. So we're going to pass it out of the House, in my opinion, or at least out of this committee. The events of the last week or two have sort of reinforced my view that when we have a program, and we can argue about the numbers, but these programs default at a higher rate. But let me go ahead and conclude, because while I do recognize. Okay.
I'm sorry.
I do recognize that 6694 attempts to mitigate the risk by limiting the use of seller-funded down payment assistance to borrowers with a credit scores above a certain level, and that will help. That will help. It will help, in my view, not over what we did in July and ban them, but it's better than what we had before. But it doesn't, in my view, address all my concerns that prompted me to include elimination of seller-funded down payment assistance in the first place. Now, I know that members of this committee have gotten a lot of mail from constituents wanting it put back into effect, realtors and others. Given the potential devastating, this is my conclusion, effect of these programs on the financial condition of the FHA, and taking note of the present environment, it should come as no surprise that HUD is also not able to support this legislation. For that reason, Mr. Chairman, I oppose this legislation and urge other members to do so as well.
Gentleman from North Carolina.
Move to strike the last word.
Gentleman's recognized.
And I won't take the full time, Mr. Chairman. I just wanted to say that this morning we had a RESPA hearing, really informative hearing, and just about everything that was discussed at that hearing there were pros and there were cons. But the thing that everybody uniformly agreed on was that it's not the product that is the problem, it's the it's the failure to market the product and get the product to people who could afford to pay a loan that's the problem. And that's the situation here. It's not the down payment assistance that's the problem. If you look back on the disproportionality of people who were foreclosed on who received down payment assistance, that doesn't mean down payment assistance in totality is a bad thing. It means that down payment assistance was given to people who had another set of problems that resulted in them being able, not being able to pay their loans. And the problem I have with what we passed before is the total prohibition against down payment assistance. Mr. Green's approach is one that's designed to modulate that, take into account that there may be additional risk associated with loans in which the borrower receives down payment assistance, but saying that the problem is down payment assistance itself is just not an accurate way to describe what the real problem is. So I think Mr. Green has come up with a sound approach to make something that can be problematic. Just about everything in the lending process can be problematic for some borrower, and that doesn't mean we outlaw every component in the process. Otherwise, there wouldn't be any lending at all. We've created a scapegoat here for down payment assistance when I think the problem was lack of supervision, lack of monitoring. Some people who lost their tax-exempt status, who were giving down payment assistance when they shouldn't have been. But the problem is not down payment assistance itself; is the failure, as there were failures in other aspects of it, the failure to adequately supervise lending and to have a framework around it that made people be responsible. And I support Mr. Green's bill because this requires more responsibility to address the concerns that Mr. Backus has raised, but it doesn't throw out the whole baby and the bathwater in the same tub. I yield back.
Gentleman from California.
Thank you, Mr. Chairman. I've tried, when we drafted this bill, I tried to take a lot of consideration to what some members have expressed as their concerns. And Ranking Member Backus, I have great respect for you, as you know, and I think we tried to listen to your concerns, and I think we actually implemented necessary measures in this bill that we hoped would adequately deal with it, especially risk-based pricing, provides more accurate pricing of loans relative to the risk posed by the borrower. This gives FHA authority to charge higher premiums for borrowers who pose a higher risk, and does not only risk-based pricing promote a fair fee model, it would also enable HUD to serve more borrowers while retaining the accrual soundness of FHA. I think one thing that's probably bothered me the most about what FHA did is they came to us in 2003, as many of you recall, and they said they wanted to start the American Dream Down Payment Initiative. And they said the private sector has done such a good job at getting people into homes, we want the federal government to use taxpayer dollars to do the same thing. And we actually implemented the American Dream Down Payment Initiative after what the private sector was doing. And now HUD comes along and says, well, let's get the private sector out of it, but we, the federal government, want to use taxpayer dollars to continue the program. And if you have a family member who wants to give you money or an employer who wants to give you money, we'll let them do that, but we won't let the private sector do it. And I think that's absolutely unreasonable. And if you look at the individual groups who are really supporting this bill, the National Association of Home Builders, Realtors, and Mortgage Brokers, and some will say, well, those are people directly involved with the industry, so they have a vested interest. But the Christian Community Development Association, which is enormous. I'd like to read a little bit of their letter, and they absolutely support this program and have been involved in it since about 1960. It says the roots of the Christian Community Development Association, CCDA, stretches back to 1960 when John and Vera Mae Perkins relocated their family to a struggling community in Minden Hall, Mississippi to work with people there. The Perkins developed 35 years of loving the principles of Christian community development in Mississippi and California. Today, the CCDA is a nonprofit national organization made up of over 3,000 individuals and more than 500 organizations from grassroots community-based groups, some of the largest relief and development organizations of the world. And their conclusion letter was the ban on privately funded development assistance takes in effect on October 1st, 2008 will have a devastating impact on access to homeowner opportunity for low-income, working-class families and minority home buyers. A particular concern is the fact that this ban will deny credit-worthy home buyers access to the safety of FHA-insured fixed mortgage rates, where therefore you urge Congress to act quickly to pass H.R. 6694. This is probably one of the largest groups to helping low-income people in the United States get into housing. I think with what we've done in this bill on risk-based premiums, we've given FHA the authority to minimize any risk associated with giving down payment assistance. And there's a very good amendment that I'm going to support by Brown-Waite and Wilson. It's an amendment, and it basically deals with the down payment reform and allows civil monetary penalties for anybody, basically up to $1 million against mortgagees, lenders, and their participants of FHA programs who violate the process and the law in falsifying appraisals or other documentation to get people into homes. I think this is great. I think it eliminates some of the concerns some people had. If you have somebody falsifying an appraisal, they should be held accountable for it. This amendment will do that, and that's been one of the strongest arguments I've heard against this bill, that how do you deal with an appraiser if they're falsifying an appraiser or somebody else is giving information that's not accurate, and that's just, I think we'll deal effectively with that. But under the program, qualified charitable organizations have provided creditworthy borrowers who are unable to meet the 3% FHA down payment requirement the opportunity to buy a home using FHA-insured mortgages, and FHA loans in this type have worked very well. The market we're in today is a very bad housing market. There's a lot of people losing their homes who have put 20% down. It's not just the people who have used down payment assistance, but there's many people in trouble. I think we've tried to do our best to deal with concerns, and Spencer Bacchus, I think you've raised credible concerns, and I respect those tremendously, and I hope, respecting your concerns, we've dealt with those in this bill, and I yield back to Balance.
Gentleman from California.
Thank you very much, Mr. Chairman. I've thought a lot about this down payment assistance program, and I've tried to understand what HUD's problem is with the program. When I first heard about HUD's opposition, they could not articulate very clearly what they didn't like about the program. As a matter of fact, I think it was during that period of time that I learned that if it had not been for down payment assistance, FHA would not have remained alive. They had been abandoned by the other financial institutions. You had the mortgage market had come up with all of these exotic products. They didn't need FHA anymore. And so interesting in all of this is the fact that the regulators were not, HUD, nobody else, was taking a look at all of the fancy products, exotic products that were being created, the arms that were being created, 6 months, 9 months, all kind of arrangements that truly got us into the problem that we're in with the subprime meltdown. But then, all of a sudden, here's a program that not only assists folks who work every day but cannot afford to put together the down payment, but they can afford to pay the mortgage as exemplified by the way that they've paid their other bills. And here's a sound program that did well, had done well, was being opposed for no good reasons. And then later on,
Would the
yes,
gentlelady
I will yield.
Let me articulate our concern. Now, I'm sure people in the audience and not following this issue, none of us are opposed.
Some of them here, the people who have the first issue have left, some of them are following it.
None of us are opposed to legitimate gift. In fact,
Unless you
the
remember
leg-
excuse me, the gentleman we deal, yes, there are people opposed to legitimate gifts. We members of the House have said no one can give us one. Let's not forget that.
in the down payment assistance program, a family member can give, a labor union can give, a friend can give, employers can give, government programs can give. What the prohibition is what the IRS and FHA refer to as circular giving, where an organization that is funded by the seller, then the seller gives money to the organization, then the organization turns around and gives money to the buyer. And what the objection is it's really not a gift, in that the seller expects a higher purchase price, and in fact, on many of these loans, the buyer starts upside down with absolutely no equity. The numbers, and I'll introduce them into the record. I won't belabor the point, but the numbers show that these loans do default, and they're not only my objection. If the high credit score is an indication that the buyer can overcome the higher selling cost.
Reclaiming
But
my
it's
time.
still.
No, I really do appreciate that explanation, but I really do have to use the rest of my time to try and give support to this program. I don't think that the idea of the default rate or the information that we have about the default rate is very convincing. It's not very convincing because what we had happening in the mortgage market, we saw default rates much higher in all of the other efforts that we are alluding to around here. I sometimes think that HUD did not support the program because they had not developed regulations for the program. They didn't have their fingerprints on the program. And that's all they had to do, was to say, this is what we like, this is what we don't like. So what we have here is we have come up, and Mr. Green has come up with a bill to deal with some of the criticisms about the program. And we had already started to deal with risk-based financing in the legislation that we passed, H.R. 3221. And so what we have done is we have made it even stronger, and we've taken off the sunset so that it can be used in dealing with this program. I would simply like to say that we all believe in the American dream, and we all believe that we want to help American citizens own a home. We all know that amassing a down payment is very difficult for some people who do work every day and who can't afford a mortgage payment. And we say we want to help them. And I think Mr. Miller described very accurately the fact that we came up with a government-assisted down payment program on this committee. And so we can't say that something's so wrong with the concept that we can't support it. And I would just think that we would take a look at the bill before us today and how we deal with replacing the one-year moratorium on risk-based pricing that's contained in H.R. 3221 with a provision of H.R. 1852, which allows risk-based pricing for borrowers with lower credit or FICO scores, but prohibits it for borrowers with higher ones. So I'm simply asking my colleagues to continue this support for American citizens who want to own a home but may not be able to come up with the down payment, but who can. And we're going to make higher requirements for them to have higher FICO scores. And I think that this is going to take care of the problem. And I think in the final analysis that with FHA, the way that we have reformed it, and the way that we're strengthening down payment assistance, that we truly will be able to help a lot of our citizens get into a home.
The gentlewoman from Florida.
Thank you, Mr. Chairman. I do have an amendment at the desk.
The gentlewoman, the clerk will designate the amendment.
Amendment to H.R.
I ask unanimous consent the amendment be considered as read. Is there objection? The chair has none. The gentleman for it is now recognized for 5 minutes.
Thank you, Mr. Chairman. As many members have already said here today, down payment assistance is a valuable tool for first-time home buyers and also for low-income home buyers. In Florida alone, almost 50,000 people have benefited from down payment assistance. Moreover, in the dollar amount that translates to is approximately $6 billion in mortgages that have been generated in my home state because of the down payment assistance program. However, the need for reform is urgent, and I thank Representative Green for introducing this piece of legislation. Authorizing risk-based pricing in down payment assistance will ensure that those who need it will be able to get it. But we should not stop there. As with any loan program, down payment assistance carries with it a potential for abuse. The problem actually lies in the asymmetric relationship between the loan officer and the home buyer. Simply put, the loan officer has more information than the home buyer, and the home buyer, meanwhile, has no choice but to take the loan officer at his or her word. Most loan officers are honest people. However, by introducing a simple, no-cost regulation, Congress can easily create a deterrent to those who would be transgressors. My amendment provides for civil money penalties for anyone compensating, instructing, inducing, coercing, or intimidating a person who conducts an appraisal of the property. Providing civil money penalties will act as a strong deterrent to any dishonest behavior that anyone may think that they could engage in. It also will help to ensure that homeowners are not saddled with loans that are in excess of what the value of their home is at that time. This is a simple common sense amendment, and I urge my colleagues to support it.
Gentleman from California.
Yes, Mr. Chairman, I totally support this amendment. I listen to what Mr. Baca says, and I agree with his concerns. I mean, they're legitimate concerns, and I think this amendment addresses those. It not only says for compensating, but it says for even attempting to compensate an appraiser. And it could be, you can't go to the appraiser and say, well, I'll use you if you meet my numbers, or, you know, we'll pay you more for meeting numbers, because it says to compensate, instruct, induce, coerce, or intimidate a person. I mean, that's very, very broad base. I think this bill needs that, because the groups we're talking about who are helping people are legitimate groups who go out and get legitimate FHA-approved appraisers to appraise the value of a unit, and I think this amendment goes a long way, and I would support the amendment.
Gentleman from Texas.
Thank you, Mr. Chairman, and I thank the lady for introducing the amendment. I support the amendment. I appreciate the bipartisanship that she has shown. This amendment will provide the means by which persons who seek to circumvent what is a legitimate estimate to be penalized. I don't know that we can do much more than penalize persons who seek to circumvent legitimate estimates, which is what we do in the law in so many other areas, wherein we have persons who are breaching the law. We penalize them. We don't, as Member Watt has indicated, do away with the entirety of a program. I would also like to thank Member Miller for his support in helping us with this, Chairwoman Waters, and also Member Shays for his support. This bill, I believe, with this amendment, is going to be a much better bill, and I ask my colleagues to support it.
I did 2 Republicans vote, 2 Democrats. Gentlewoman from California.
Thank you, Mr. Chairman. I have a question for the gentlewoman from Florida. In our field hearing a couple of weeks ago, the issue was raised about appraisers who base their appraisals on their fees are related more to the value that they appraise the house at. So there is an incentive for them to appraise higher because their fee is higher. Is that issue addressed in your amendment?
No, it's not. When an appraiser goes in, he does a market analysis of similar properties that have been sold in the area. Recent properties, now as we all know, property values have decreased substantially, so the assessments are coming in lower. But what we actually had a scandal going on in my own home county where this exact issue was taking place, where they were rolling the amount for the down payment into the actual much higher appraised value. State law is going to deal with that issue.
The gentleman from California yield to me?
Yes.
Yeah, and I appreciate it. She was at that hearing that I was at. I would read it as this way. If there is any deviation from the normal manner of appraising that builds in that incentive, then this would be covered by this. It says that would clearly be an inducement. It says for compensating, instructing, inducing, coercing, or intimidating. And I think we would agree to make it clear that if there was any deviation from normal appraisal processes by putting in this incentive to go higher, that would be a violation of...
Would the chairman yield? I think
It's the gentleman's time.
I think
I yield.
Section 536 deals specifically with that. And this applies to that.
Well, let's, I think we can get an
I have a
agreement.
copy of that.
We
if
will
you'd like
make it clear that that's what we intend to do, and if there's any doubt, I think we have an agreement that is we will get that done. Is there any further discussion? The question now
Mr.
is...
Chairman, let me point
I
out
want
to
to
you.
pass your amendment, Ginny. What do you want?
Yes, I know you want to pass my amendment, but it is referred to in here, Section 536, and I have a copy
right.
of it with me if you'd like.
Oh, okay. We will double check that to make sure that it's covered. Is there further discussion on the amendment offered by the gentleman from California? I hear none, so the question is on the gentleman from Florida. All those in favor of the amendment say aye. Aye. Opposed, no. The ayes have it. The question is now on the bill as amended. All those in favor? Oh, I apologize. We have a manager's amendment. I recognize myself to offer the manager's amendment. And I'll call on Mr. Green. Oh, it's Mr. Green's amendment. I recognize Mr. Green to offer the manager's amendment. The clerk will designate the amendment. I ask unanimous consent that further reading be dispensed with, and the gentleman from Texas is now recognized for 5 minutes on the manager's amendment.
Thank you, Mr. Chairman. The manager's amendment does much of what we have discussed. The manager's amendment will clarify what we've indicated about those who have credit scores without seller assistant down payment of 600, below 600. Those persons with credit scores below 600 without seller assisted down payment pursuant to the manager's amendment will have risk-based pricing. Those above, it is clear with this amendment, will not have risk-based pricing. The manager's amendment also goes on to clarify the risk-based pricing with reference to persons who do receive seller-assisted down payment and those who have scores of 620 to 679 will pay a premium. That premium will be different from those who have scores of 680 and above. The 620 to 679 premium will be 3% at closing, 1.25% annually. And those who have credit scores below 620 will have HUD. HUD may implement a program, and it is optional, to serve these persons. And those persons who do not receive the seller-assisted down payment with a credit score of 620 or below may pay a higher annual premium and a lower upfront cost if HUD so chooses to implement this program such that they too can have the opportunity to purchase a home. This manager's amendment, I think, eliminates the concerns that have been raised by Member Bacchus, perhaps not to the extent that he would like us to, but I hope that it addresses it in a substantial way. I also, again, would like to thank
No more
Waters.
thinking. Any further discussion on the manager's amendment? If not, the question is on the manager's amendment. All those in favor will say aye. Opposed, no. The ayes have it. The manager's amendment is agreed to. The question is now on the bill as twice amended. All those in favor say aye. Opposed? The ayes have it, and the bill is passed, and we will be moving this. Members should know we expect this to come to the floor under a rule. Sorry, Albert, I want to move it. I'm sorry. We got to move it quick. Sorry. I'm afraid of it. I will now call up H.R. 6870.
H.R. 6870, to ensure that implementation...
I ask that further reading be dispensed with. Without objection, the reading is dispensed with, and I recognize myself for 5 minutes. This is a revised version of the bill dealing with the regulations to enforce the Internet Gambling Act. Members will recall that we had a very close vote, 32-32. Subsequent, some members expressed some opinion to Treasury about it. We have made some changes in the bill today in the interest of trying to get, frankly, a majority, but also more broader agreement and focusing on where the problems are. First, it had always been our intention to allow the professional sports leagues to opt out if they wanted to. They asked that this be, in fact, that they be opted out in the bill. We've done that. So the bill now will protect sports from being included. It also, at the request of a number of parties, and it would seem to me a reasonable thing, asks that a list be prepared by Treasury in its regulation of what is and isn't acceptable. You know, one of the fundamental principles of American law is you got a right to know what the law is. And this would give people an understanding of what is and is not covered. We also asked that it be a full rulemaking. There's been a great deal of debate on this issue. I will incorporate by reference everything we said the last time, but I would note that it is the last time's bill plus an exclusion for sports and the requirement that a list be developed for the guidance of people in the industry. The gentleman from Alabama.
I thank the Chairman. Mr. Chairman, I guess today I could be termed the world's greatest loser because I'm apparently going to lose.
Don't bet on it.
So
At least not on the internet.
at least I ought to be some TV show I could go on and make some money. But, Mr. Chairman, it's disappointing that we're marking up yet another bill intended to impede the implementation of the Unlawful Internet Gambling Enforcement Act just 2 months after this committee rejected a similar measure. Because I believe that the act should be implemented without further delay and congressional interference, I oppose this latest attempt to derail it. Enactment of the act at the end of the last Congress capped a bipartisan multi-year effort to protect American families. The law was passed with a coalition, support of a broad coalition that included the overwhelming majority of members on this committee, college and university presidents, the American Banking Association, the American Psychiatric Association, and major sports organizations, including the NCAA, Major League Baseball, the NFL, NBA, and the NHL. And they have just informed me a few minutes ago that the sports groups, that they're still opposed to this bill. Now, there may be some debate on that if the chairman has some clarification. Some claim that illegal internet gambling is a victimless crime. In fact, it's very real victims of the young people who, by the tens of thousands, are becoming compulsive, addictive gamblers. Studies show that the earlier one begins gambling, the more likely it is he or she will become an addicted problem gambler. In the most recent study of internet gambling in Canada, people talked about my Canadian survey, where internet gambling is regulated, the University of Lethbridge, Professor Robert Williams, found that the average monthly loss of internet gamblers is $541 compared to $82 loss for all gamblers. So it just makes a bad problem worse. The characteristics of illegal internet gambling are unique. Online players can gamble 24 hours a day from home. Children may play without sufficient age verification. And I was hopeful we were going to address that part in this legislation, and we have not done that. And betting with a credit card can distort a player's perception of the value of cash, leading to gambling addiction, bankruptcy, and crime. Imagine your outrage if someone tried to open a casino next door to your home and said that your children were welcome to come in and gamble. In effect, that's what these offshore casino sites are doing, as they turn the computer in your child or student's bedroom into a slot machine. Before the act, Americans were sending nearly $6 billion to unregulated offshore online casinos per year, nearly half of the $12 billion bet worldwide over the internet. These sites evade rigorous U.S.-based regulations that control gaming by minors, problem gamblers, and ensure the integrity of the games. Since the act, big players, and I was a co-sponsor of the act, big players in the industry such as Party Gaming, which runs the partypoker.com and partybingo.com websites, have pulled out of the U.S. market. According to the Annenberg Public Policy Center, weekly use of the internet for gambling among college-age youth has declined precipitously, dropping from 5.8% in 2006 to 1.5% in 2007. The strong drop in use of internet sites, also gambling sites, also suggests that federal regulation restricting the transfer of funds to internet gambling sites has had its intended effect, the director of the Annenberg survey said. We shouldn't stop now. The act is indispensable because other enforcement tools are inadequate. It is true that the law imposes new obligations on financial institutions to identify and block internet bets. However, this is necessary because internet gambling regulation cannot work like traditional casino-based regulation. Without the act, illegal casinos will sweep billions of dollars out of the United States into largely unknown and all too often criminal hands. And let me conclude. I have two more paragraphs. The bill we are considering today does reflect a more targeted approach than the one the committee rejected in June, and I'm thankful for that. It would at least require financial institutions to begin blocking sports betting over the internet once final regulations implementing the act are promulgated. I appreciate the efforts of Chairman Frank has made to scale back this bill, but I still can't support it. I should also note that the professional, as I did earlier, and amateur sports associations that would presumably benefit from the blocking of sports betting online have informed me today that they oppose this bill as well. In closing, Mr. Chairman, let me again implore officials at the Treasury Department and Federal Reserve to complete their work on implementing the Uniform Internet Gambling Enforcement Act rules. These regulations are now more than a year overdue. It is not too much to ask the executive branch of our government to comply with its legal duty and finalize these regulations. I yield back the balance of my time.
Thank you much. The gentleman from New York, Mr. King.
Excuse me. Thank you, Madam Chair. I would just keep my remarks very brief. Commend the chairman for perfecting the language which I originally had. This is clearly a step forward. Hopefully, it will bring about a majority of the votes. To me, this is something which is significant. I see that this legislation is strongly supported by CUNA, the Credit Union National Association, other groups. It's, I believe, something that should be done, and I commend the chairman for his skill in putting forth this compromise legislation. I urge its adoption. I yield back.
Thank you very much, Mr. Clay.
Thank you, Madam Chair. I just want to state my alarm at Major League Sports coming forward at this late date to announce their opposition to this bill. I'm really kind of puzzled by their stance, especially when you look at what has happened in Las Vegas, where you have legal sports books who allow gambling on Major League Sports. I'm trying to figure out what the difference is between internet gambling and legal sports books run by all the major casinos in Las Vegas, like Caesars, like Tropicana, like all of the others. I think it's kind of disingenuous on the part of Major League sports in this country. And sometimes we should be willing to admit when we as lawmakers make a mistake, and pass a law that is really unenforceable. Now, to talk about the illegal sports, I think that the manager's amendment really addresses this. They order the sports books to block any betting on major league sports, and if that doesn't satisfy the major league sports in this country, then nothing will. So I'm really kind of puzzled at their stance and disappointed. And Mr. Chairman, I yield back.
And I will recognize myself to say I share the gentleman's views. Our very able staff member, Kelly Larkin, worked with the sports people. We thought we were doing everything that they wanted. I, frankly, didn't want to. I thought they were being asking for too much. It's kind of a dog in the manger. They get themselves exempted. I don't understand why the sports leagues want to tell other people that they can't do what they want to do. It just seems to me that's inappropriate. And I want to go back. There are 2 points for this bill for me. First of all, people ask me, were you encouraging people to gamble? No. I don't think we should take the position that human activity is divided into two classes, things that are illegal and things that the government encourages. There are a couple of things we should encourage. We should be encouraging efficient energy use now. We probably ought to be encouraging people to try and protect their health. But how people spend their leisure time should neither be made illegal or encouraged in a free society. It ought to be for personal choice, recognizing that some will abuse it. Some will abuse almost anything. And then there is the question, if you're going to do this, about hijacking the banking system into doing it. Now, that's why one of the things we do in this, it's very reasonable. By the way, if this bill passed, I would still want to change the law. This isn't everything I want. I would like to repeal the law. I would like to not tell adults that they can't get a bet down. But under this bill, much of that will still be illegal, but at least the banks will know what is and isn't illegal. We are asking Treasury to give them a list. And I have to say to some of my conservative friends, it seems to me there's a certain inconsistency. This is a degree of regulatory certainty that we are often asked to give. That's what we are saying. Give them a list of what is and isn't done. By the way, it is still the case that if you ask the question, is betting on horses, horse racing, legal or illegal, it will depend on which department you ask. Now, how does the bank decide whether or not to process that? And again, we've been told, don't interfere with the internet. So for that reason, I hope the bill is adopted. And now let me recognize myself, if there is no objection, to offer the manager's amendment. Clerk will designate the amendment.
Amendment in the nature of a substitute to H.R. 6870 offered by Mr.
I ask
Shays.
unanimous consent the amendment be considered as read. The amendment embodies what I talked about, the changes that we made. Is there any debate on the amendment? If not, the question is on the amendment. All those in favor will say aye.
Aye.
Opposed, no. The amendment is adopted. I would also ask to be able to put into the record at this point letters in support of this bill from my good friends, the Chamber of Commerce of the United States of America, from the Competitive Enterprise Institute, the Media Freedom Project, and Freedom Works. Any more of these, you're going to lose me. From the Financial Services Roundtable, and from the Credit Union National Association. Let me just say, here the credit union people saying, please, don't make us the enforcers of your gambling thing. Don't make us gamble on this. Is there further discussion? If not, the question is on the bill as amended. All those in favor will say aye. Aye. Opposed, no. The ayes have it. The bill is agreed to.
Mr. Chairman,
Gentleman from Alabama.
I request a recorded vote.
The gentleman requests a recorded vote. Those joining with him will signify. A sufficient number, the recorded vote is ordered. That concludes the committee's agenda. We will now, as is our usual procedure, have consultations between the staffs of the majority and minority to find a convenient time on which we can have this vote. It may, for some members, not be a convenient subject, but we will try to find a convenient time, probably later today. I'm going to make a recommendation now, subject to the staff. We are here late today. It may well be that after the next series of roll calls would be a convenient time. That is, at the conclusion of the last in the next series of roll calls, because that will not be the last roll calls of the day. So subject to that not being doable, that's a tentative suggestion, and the two staffs will work this out. And,
Parliamentary inquiry.
yes, gentleman from North Carolina.
My parliamentary inquiry is it possible for those of us who are here to go ahead and vote?
Unfortunately,
so that
under
we
the
don't have
rules,
to come back?
under the rules, it is not possible. I
Okay.
regret to tell my friend that it is not possible. You can, we need 2 more years in the majority. The meeting is now recessed to reconvene. Well, one further thing. Let me. No, we've already had the vote, so we have now recessed, subject to reconvening only for the December. No, it's still not enough time for people. I don't think that's enough time. You think it is? Well, we haven't been able to email people, and there may be people who have appointments. Have we checked our people? We have members. Yeah. Right. Voting, the gentleman from Alabama reminds me, voting is an option. It is not compulsory. But I'm going to go back to after the last roll. You're going to be here for, because we're not, the next set of roll calls will not be the last roll calls for the evening. At the conclusion of the next series of roll calls, it's one vote. Members, it will certainly be the case, I was saying to my friend from North Carolina, at that point, members will be able to come in, vote, and leave, because it's only one roll call. The hearing is in recess pending the reconvening for a vote.